Hello, good morning. You're watching Market Cafe on ET now. I'm Vinny Motiwala, with me Sneha as well. Good morning, Snehi. And today, how is the US market handover that we're getting in? As of now, Nifty implied is indicating a positive start.
Yes.
But do we have a positive handover from the global markets?
Absolutely. Looking positive from the US. You don't have big moves coming in, but nonetheless, all three indices have ended the day yesterday, in fact, with a positive note. So let me take you through what the global handover is looking like. Good morning. Let's kickstart the show with the US handover then. US stock futures were a little changed last night after the major averages closed higher to the start of the second half of 2024. Tech stocks, as usual, continued to outperform. Wall Street is coming off a positive session for the benchmarks. The Nasdaq gained almost 0.8% to close at a record high. S&P 500 rose 0.3%. Meanwhile, you had Dow that added a 0.1%, a 50-point uptick coming in for that index as well. Investors are now deliberating whether the strong start to the year can continue in the second half of 2024 as well. While megacap tech stocks continue to outperform, you have bearish market observers. They're worrying about the poor breadth that could signal some choppiness ahead. Now remember, today Fed Chair Jerome Powell, he is going to be speaking at 9:30 a.m. Eastern Time, which is US time, before a policy panel at the European Central Bank Forum. The central bank leader will be a part of a panel discussion and will not be issuing prepared remarks beforehand. So any commentary that comes will be very interesting to note and watch for. He will also be joining ECB President Christine Lagarde on this panel. So some very exciting commentary on the inflation status of both the European Central Bank as well as the US and the Fed Reserve in particular can be observed at this panel discussion today. Now, when it comes to data, the May job openings and labor turnover report is also out later in the day today. Economists polled by Dow Jones anticipate the number of job openings last month to be 7.9 million, down from 8.1 million in April. Markets will end trading early tomorrow and will be closed on Thursday on account of that 4th of July holiday. And on Friday, investors will get an insight into the labor market with the June jobs report. You also have the JOLTS, job opening data today, like I told you about. So that was largely the handover coming in from the US markets. Positive moves coming in. Dow slightly underperforming both of its peers, but closing in the positive nonetheless. Let's shift focus, talk about what European markets have done, and it's a green across the screen for European markets as well. You have DAX that has ended the day with 0.3% gain. FTSE has ended flat, just a 2-point uptick, but in the green nonetheless. And Stock 600 has reversed the negative sentiment that it had been seeing over all of these sessions in the past, has closed for the day with an uptick of 0.3%. And French election is the biggest cue that has aided these markets yesterday. And remember, 2 days later, on the 4th of July, we also have the UK election coming up. So lots to watch out for when it comes to European markets as well. But well, yes, that sums up the global handover coming in this morning, at least on the equity side. When you take us through what's been happening with the world of crude.
Lot of excitement there because crude surely saw a very sharp jump up. Look at Brent crude oil right now trading at $86, above that mark, $86 per barrel mark, which is I think the highest level that we've seen somewhere since April. Last overnight it was a good jump up of more than 2%. Right now also it's trading with gains of more than 1/10 to 2/10%. So Brent crude oil comfortably above that $83 per barrel mark that we saw last night. And obviously what is interesting also is that, like you were mentioning, 4th of July. So that holiday, everyone's expecting an increase in terms of demand due to these northern hemisphere summer driving season. And the conflict in Middle East still continues. So that is a concern that comes in terms of the global supply, oil supply. How is that shaping up? And that is why the spike up that we saw in oil prices, almost near a 2-month high is what we could say. The Brent crude oil prices are trading at $86.6 per barrel mark as of now. WTI crude oil also somewhere about the $83 per barrel mark. Now let's move on, and obviously let's not forget that a lot of focus also comes in terms of increase in terms of geopolitical risk that is there, and in terms of the increase of demand for energy. That is a concern that everyone's keeping an eye out on. So yes, Brent crude oil, WTI crude oil, spike up in the prices that we are seeing just ahead of the 4th of July holiday that we'll be watching out for in the US. But other than that, when you're looking at it in terms of the gold prices, where is gold headed? Gold is also seeing a mild bit of an uptick today. What everyone is watching out for is those jobs data that will be coming in the US market. 2,340 $51 per barrel, per ounce, I beg your pardon, is what gold is trading at. Silver also shining a bit in trade, 0.2% of uptick this morning. So yes, that's how the commodity is looking like. Brent crude oil surely seeing a sharp spike up today. And that's what we'll be keeping an eye out on. If this continues till the 4th of July or even after the 4th of July, then a significant spike up is a key factor that we'll be watching out for. Already trading at a 2-month high is what the Brent crude oil is doing.
Crude reaching new highs every day, and let's see if that momentum can be sustained. With that, let's also take a look at the important cues to watch out for today. Like we mentioned, from the US, you have the JOLTS job opening data coming in. Eurozone, you have very important CPI print coming out today along with unemployment data, so watch out for that. Let's shift focus back home, talk about some corporate action and board meetings taking place today. Epigral Limited and Automotive Stampings will be having their AGMs, annual general meetings today. CDSL board will mull bonus issue today, so watch out for that and any announcement on that front. Bajaj Consumer Care buyback will be happening today, and Oil India will be trading X bonus in the ratio 1:2, so watch out for that stock as well. In terms of the primary markets, you do have one IPO making its D Street debut today, and that's Allied Blenders and Distillers. So we'll keep a close eye on how that IPO is listing on the bourses today. Lock-in period is going to be ending for Radiant Cash Management, wherein 20% equity comes out of lock-in. And well, yes, lots happening on the geopolitical front and the global front as well, where you have various commentaries coming out. Like I mentioned, Fed Chair Jerome Powell, you have ECB's Christine Lagarde. Also with that, you have ECB's Isabel Schnabel all set to speak, and you have China's Xi Jinping expected to attend the SCO summit. So lots happening on the global front as well. So well, we'll just keep a close eye on all of these cues in today's trading session, Vinny.
Absolutely, that's what we'll be keeping an eye out on, all the important cues. But also, talking about the global cues, let's also kickstart the morning by talking about some of the important data points. US manufacturing activity edged lower in the month of June, deepening a recent slump on a continued weak demand, and the June data came in below the market expectation at 49.1%. Now, other than that, which is marking the third straight month of below the 50 reading on the index. Remember that June's data extended the recent slump, which began after a positive reading in March, briefly snapped the 16th straight month of contraction. The 8 manufacturing industries reported growth, but textile mills, transportation equipment and electrical equipment contracted during this time.
All right, let's keep it going with the US. New York Fed Reserve President John Williams expresses confidence over inflation progress, says he continues to believe that pricing pressures are moderating back to Fed's targets. Additionally, he also defended the central bank's delayed response to the outbreak of inflation in 2021, saying that policymakers were grappling with extreme downside threats to the economy and financial markets in an atmosphere of tremendous uncertainty. Now remember, expectations are largely that the central bank will use an upcoming 5-year policy review to discuss in detail the lessons learned from the pandemic. The said review is scheduled to take place in 2025.
Moving on, meanwhile, ECB's Christine Lagarde said that the central bank needs more time to conclude that inflation is on the path towards a 2% target. Additionally, she said that benign economic developments indicated that the rate cuts are not urgent. Remember that ECB lowered the rates for the first time in June after its most aggressive rate hike spree on the record. Now, however, what officials held back on committing to any subsequent moves as of now, arguing that the outlook so far is too uncertain to telegraph the second cut as of now. And that's what we've seen in terms of the commentary coming in from across ECB members, and that is what is reiterated today even by Christine Lagarde.
Okay, let's move on then. Let's shift focus away from central bank action. Global shipping major Maersk said that the coming months will be challenging and carriers and businesses as Red Sea disruption continues to be on the point of bother. Maersk and other shipping companies have diverted vessels around Africa's Cape of Good Hope since December to avoid attacks by Iran-aligned Houthi militants in the Red Sea, with the longer voyage times pushing freight rates higher.
And after a dismal rainfall in June, across most parts of the country, IMD has predicted India could experience above normal rainfall in July, except for parts of northeastern region. The update bodes well for India as June saw monsoon deficit at around 5-year high of 11%. Let's go across to my colleague. Actually, let's listen in to what the IMD chief, I beg your pardon, had to say, Mr. Mohapatra, in terms of what is the expectation for the coming months in terms of monsoon.
2024 July rainfall averaged over the country as a whole is most likely to be above normal. Most parts of the country is expected to get above normal rainfall activity, except the northeastern states, some parts of East UP and adjoining Bihar, some parts of Jharkhand, and Southeast Peninsula, Ladakh, where we can expect the below normal rainfall activity. And of course, the river and flooding. So all these, however, we will be monitoring and providing you information on day-to-day basis. Now, this is the maximum temperature what we are expecting. You will find that there is a mixed forecast here. Many parts of Northwest India, we are expecting below normal normal temperature. Similarly, South Peninsula, many parts you will find the below normal or normal maximum temperature. But northeastern states, many parts of central India, the west coast, we are expecting the above normal maximum temperature. If I look at the minimum temperature during July 2024, then most parts of the country we can expect the above normal minimum temperature.
All right, that's the word coming in from the IMD chief on the expectation of monsoon and the temperatures regarding the heat waves going ahead. But on that note, viewers, we'll slip into a very short break. When we return, we'll take a look at how the Asian markets have opened up and how they're faring in trade right now. So you stay tuned.
Welcome back. You're watching Market Cafe on ET. Now let's look at what the Asian markets are doing this morning, and not as exciting as we saw as a handover that came in from the US markets. Asian markets, most of them are trading quite subdued. Look at the ASX 200, that's an Australian index, that's trading down almost 0.2% in trade. Not much of an excitement there. Pull up the Kospi because we saw this inflation data points coming in for South Korea. Not an exciting number there. So yes, Kospi also trading with cuts of almost 0.6% right now, was down 0.2%, furthermore seeing a decline. So yes, 0.6% of downtick that we're seeing for the Korean index. Nikkei, let's pull that up. Japanese index, that is also trading quite flat. Actually, it was a bit lower. That's seen a recovery. So that's Nikkei is quite interesting to watch out for. Topix, that's also what I want to pick out on, and let me see what that is doing in trade, because that was trading in the red at one point of time. If we do have that, that will be an index to watch out for as of now, because that was also quite subdued and flattish. So we'll keep an eye out on that. Other than that, what we're seeing in terms of Shanghai and Hang Seng, that's opened up positive. So yes, at least some of the markets are seeing some bit of a recovery on that positive side, at least for the Hang Seng Shanghai. Shanghai quite flattish, but yes, a recovery coming in the Japanese market, and this is despite the Japanese yen, which has weakened further and further away. As of now, also just last night, what we saw was it had weakened to a fresh 38-year low against the dollar, and that is what is a concern that comes in for the Japanese market. But yes, nonetheless, we've seen a recovery that's come in surely for Nikkei, but ASX 200 quite subdued, Kospi quite subdued in terms of the data point that came in on the inflation front, and that's what we'll be keeping an eye out on. A mixed opening now is what we could highlight that came in for the Asian markets. Let's see how the Indian markets open. Nifty implied open indicating a slight bit of a positive start, is what you could say, flattish to a positive start. So yes, watching out for this one.
Absolutely, flattish start indicated on the futures, but if you look at the spot rate, Winnie, a 100-point uptick is what is penciled in from yesterday's close. So let's just see how this session pans out for us, given that the global cues are looking rather positive. Hi there, welcome back. Still watching Market Cafe on ET now. Let's move on. Let's get a little stock specific now. And Karnataka has introduced draft bill for app-based platforms to provide social security benefits to gig workers and sought public feedback as well. What are the key metrics of this bill and how will it impact platform-based companies the likes of Zomato? Somit is joining us this morning with all of those details. Somit, take it away.
Well, definitely Zomato would remain in focus given the fact that the Karnataka state has released a draft bill on platform-based gig workers. Now, the bill is likely to be placed in the upcoming monsoon session of the state legislature. Now, what all is included in this bill? Now, it classifies aggregators as those providing services like ride-sharing, food and grocery, delivery, logistics, e-marketplaces, professional services, healthcare, travel and hospitality, and content and media services. So Zomato is definitely getting included under this bill. Now, what are the terms and conditions that the bill presents? It says that aggregators will have to enter into a fair contract according to guidelines which will be issued by the Labour Department. Apart from that, it also proposes a fee which will either be a part of the transaction cost or their annual turnover in the state. Now, the state is also asking the aggregators to set up a welfare board and a welfare fund for these gig workers, and they are also saying that there won't be any unjust dismissal of these gig workers, and they will be provided with a dispute resolution mechanism. Now, what could be the impact of this? However, this is just a proposal and is yet to be implemented, but if it gets implemented, this laws could increase the delivery cost burden going forward. However, brokerages are expecting that this increase in cost will be shared by all the stakeholders, but they are also expecting increased regulatory scrutiny and more complicated operating environment for platform-based companies, which could be kind of negative for Zomato as well going forward. So keep an eye out on Zomato.
Surely we'll be keeping an eye out on that. But let's move on and talk about FMCG stock. Let's talk about Emami. Now, Emami, we've seen that yesterday the stock was running up in trade. But before that, when you look at it, it's not much of a outperformance versus other FMCG players in the past that we've seen from Emami. But what's interesting for Emami, what could work out well in terms of a trigger? The rural exposure, look at it. It's the highest amongst the FMCG players. 50 to 55% of their revenue comes in from the rural exposure. Now, the government is expected to focus more in terms of the rural story, in terms of the growth story that will come in there. Previously, it was more capex focused. Now, this time they're going to be focusing on rural consumption. Good monsoon, so that leads to a rural recovery. So their volumes will improve, and that would be better volume growth, stronger volume growth, aiding the overall growth of the company. Other than that, the other point that works out, a possibility of is that Emami's FII holdings, that is, amongst the lowest, one of the lowest when you look at it in terms of the FMCG side in the FII holdings part. Look at it, it's at around 13%, 13.5% is what I would specify versus HUL, which is at 12.6%. So yes, it is amongst the lowest in terms of the FII holdings, and the buzz is that, there is an increase coming in for the FII holdings. FII are increasing their stake in Emami, so that will be very interesting. And let's not forget why, because Emami has the cheapest valuations right now, among the cheapest valuations, when you see a pure play FMCG, barring ITC, I'm talking about the other names, Marico, Dabur, HUL, Nestle. Emami is surely trading at a cheap valuation, 33 times 1 year forward. FY26 P is what I'm looking at right now. So yes, a lot of positive triggers will come out for Emami in terms of the story to play out, and the cheap valuations is something that could possibly support the run up for Emami.
Alright, so Emami will be in focus, but let's move on, and yet another stock that will be in focus today is InfoEdge on the back of its jobs peak index, which once again reflects a decline in the month of June when it comes to jobs, both on an annualized as well as a sequential basis. Let's take a look at what this Naukri jobs peak index says. It says that this index has fallen by 7.6% year on year and 7.8% on a month on month basis in the month of June. Now, on a year on year basis, this is the 8th consecutive month of decline coming in, so a slight bit of negative coming in for InfoEdge over here. It reflects broad-based weakening in overall hiring across sectors. Now, surprisingly, it is IT that has caught our attention this time, because IT hiring has also declined after 2 consecutive months of marginal growth, and IT services has declined by 4.8% on a year-on-year basis, and 8% on a month-on-month basis is where IT hiring has slowed down. And you also have BPO, ITES, CRM as well as transcription. They've also fallen by 9.3% on a year-on-year basis and 10.7% on a month-on-month basis respectively. So slight bit of a weakening being seen across the job markets, and this is what the Naukri jobs peak index is reflecting. So we'll just see how InfoEdge pans out on the back of this weakness in job data coming out this morning.
Surely, we will be keeping an eye out on that. But let's move on. And power financiers, the likes of REC, back in the spotlight on the hope of a new scheme for the power sector. Now, sources tell ET now that Centre's Janman scheme is looking to cover leftover households for the electrification, coupled with financial assistance. Let's go across to Prakash, who is joining in with us with more details on what is a possibility that we could see coming in for these power financiers. What is a scheme that we are watching out for? Prakash?
Yes, we are learning from our sources that the government is likely to announce a new scheme for the power sector in the upcoming budget. We are given to understand that the Power Ministry has prepared a proposal which has been sent to the Ministry of Finance for its approval. A new scheme called Janman, which has been designed for electrification of leftover households across the country. Under this scheme, around 5 lakhs households are going to be covered, and the sources are informing that the government is likely to provide around rupees 2,500 to 3,000 crore under this scheme. Along with that, the primary vulnerable tribal groups will be the focus under this scheme, and the tribal households in the states like Rajasthan, Uttar Pradesh, Andhra Pradesh will be covered. Along with that, REC is likely to be the biggest beneficiary. In addition to that, the sources are also informing that the government is likely to provide additional financial assistance to the DISCOMs to bring down their overall AT&C losses below 15%.
All right, thanks so much for that. A budget fillip for the power sector expected. REC expected to be the real winner over here. But let's move on. The Ministry of Statistics and Program Implementation has set up a panel for deciding base year on the GDP. Biswanath Goldar, the former professor of the Institute of Economic Growth, has been appointed the chairman of this panel in the Advisory Committee on National Account Statistics to decide on the IIP as well as inflation parameters as well. My colleague Anurag Joshi has more details on it. Listen in.
The Ministry of Statistics and Program Implementation has set up a panel to decide on plans to review the base year for the gross domestic product of the country. Biswanath Goldhar will head the panel as the chairman. The other members of this committee include former Monetary Policy Committee member Chetan Ghate. Now the panel will also include members of RBI, Niti Aayog and DPIIT. The Advisory Committee on National Account Statistics is deciding on the IIP and the inflation parameters, and the terms of reference for the committee includes reviewing the databases and advising on the inclusion of the new data sources. The panel will advise on the methodology for compiling of the presentation of the national accounts statistics. The exercise will be for the purpose of economic planning and policy.
Okay, let's move on and talk about the GST data point that came in, and what we are learning from saying that GST collection for the month of June has come in at 1.74 lakh crores, whereas the collection overall till the month of June has been at 5.57 lakh crores. Sumit Chaturvedi, who's filed a report on this, is joining in with us. Sumit?
Well, July 1st, 2024 marks the completion of 7 years of GST regime. It was started on 1st of July 2017, and now sources tell us that for June, the GST collection this time have been around 1.74 lakh crore rupees. It's almost flat when we compare it to May, but it's almost 7.7% up when we compare it to June last year. If we talk about the cumulative, it's from year-to-date June, it's 5.57 lakh crore rupees of GST collection, which is averaging 1.86 lakh crore rupees every month. But it's coming down from around 2 lakh GST collection registered in April. We further give the data of IGST settlement. Out of its CGST is 39,586 crore rupees and SGST 33,548 crore rupees. So since the morning, well, government has been talking about the benefits of GST regime, which have been brought in for the simplification and benefits of users. And yes, this July, the July 1st today, marks the completion of 7 years of GST regime in India.
All right, thanks Sumit for taking us through the June GST collection figures. Let's move on, and SEBI has proposed the MF Light regulations for launching only passive schemes. The MF Light regulations are drafted to reduce the compliance requirement and foster innovation. This proposal also includes minimum net worth of 35 crore for AMCs via the main eligibility route and 75 crores network for alternate routes. Ankur Mishra, my colleague, has all the details on this ET Now Newsbreak confirmed. Listen in.
Yes, as reported here on ET Now, mutual fund light regulation may see the light of the day very soon because SEBI has now released a consultation paper on the same. Now, the idea is that instead of mutual funds having stringent regulations for normal kind of products, now for passive only schemes, there can be lighter set of regulations so that they can foster innovation, be more challenging, and also focus on the idea of reducing the compliance requirement. Now here SEBI has proposed that minimum net worth of rupees 35 crore can be there for AMCs under the main eligibility route, and also financial experience of 5 years may not be relevant if you talk about mutual fund light regulations. Apart from that, alternate eligibility route net worth of 75 crore for an AMC may be appropriate in mutual fund light regulations. There was also a proposal of lock-in of 3 years of minimum shareholding of the sponsor in the AMC under the alternative eligibility route, and that may be considered for the comments which can be sent on the consultation paper. Now, the whole idea of mutual fund light regulations was proposed, was thought about at least a year ago, and now finally SEBI has released a consultation paper.
Okay, thank you so much for that, Ankur. But on that note, we're going to sip into a very short break. Don't go anywhere. More domestic updates, more stock updates after the break.
Hi there, welcome back. Still watching Market Cafe on ET Now. Thanks so much for staying tuned. Now, it's turned out to be a fairly fixed June as far as auto sales are concerned. On one hand, you have M&M Auto, you have Ashok Leyland, and both Tata, CV and PV which have reported weak numbers. Meanwhile, on the flip side, Maruti, Eicher have reported higher than expected sales. Shrishti is joining us with all the details. And Shrishti, it's a mixed set for the month gone by, but with the likelihood of good monsoon, that figure now expected to improve. Is that what the street is penciling in?
Well, for the month of June, we have witnessed a subdued sale performance across the segment, and that is coming in from the passenger vehicle as well as commercial vehicle specifically, because for passenger vehicle, we were expecting a decent set of numbers, but look at the numbers of M&M and even Tata Motors in the automotive division. Both the companies have disappointed and have registered a decline to 3 to 7% on a month-on-month basis. While for Maruti Suzuki, though the numbers were up 3% on a sequential basis, but the company's management commentary is not that great. They do say that they see expected muted growth likely in the current year. The stocks are a little on the higher side, but those are under the standard norms. But other than that, when we talk about Tata Motors, then also the commentary, especially on the EV side, is not that great, because they are spotting that because of the FAME subsidy cut as well as some of the pre-buyings that happened before March, all these factors did impact their sales data, which was actually down 34% for their EV sales portfolio in the month gone by. If we talk about the other divisions from the likes of commercial vehicle, then there too we have seen disappointment from the likes of Ashok Leyland and even Tata Motors. Both have registered just a single-digit growth on a sequential basis, while the expectation was much higher. While Eicher Motors VECV has surprised a bit, numbers a little better than what we were expecting at ET Now. When we talk about the two-wheeler segment, then therein, as a surprise, Bajaj Auto did report a decent set, 5% growth coming in on a YY basis. And lastly, from the tractor division, though the numbers for Escorts were not that cheerful, but M&M, not just the numbers were good, above than what we were expecting at ET Now. That's a 28% jump on a month-on-month basis for their tractor sales. But even the commentary is also seen to be on the positive side. So all in all, if you look at the segmental wise performance, we can say that it was indeed a subdued performance by the auto majors.
Subdued performance by the auto majors, so let's keep an eye on that. But Allied Blenders and Distillers is all set to list on the exchanges today. Ashesha is here with the listing scenario. What's the street expecting? Ashesha, good morning.
Well, yes, so Indian-made foreign liquor company, Allied Blenders and Distilleries is all set to get listed on the bourses today. Remember, it was looking to raise about 1,500 crores, out of which 500 crores was OFS and the balance 1,000 crores was fresh issue. Remember, it had raised about 449 crores from anchor investors, which included the likes of Goldman Sachs and Societe Generale, and the subscription data was also quite promising. So the total IPO was subscribed nearly 23.55 times, with QIB portion subscribed nearly 53 times. As far as the objects of issue are concerned, as I mentioned, it was looking to raise about 1,000 crores fresh issue, out of which 720 crores will be utilized for repayment of borrowings and the balance will be used for general corporate purposes. Remember, it generated about 2,600 crores of net revenue for the 9 months ended FY23 with EBITDA margins at about 7%, and at the IPO price of 281 rupees per share, it is valued at 20 times FY26 EV to EBITDA versus United Spirits, its peer, which is valued at about 40 times. So it was attractively priced. Now, if it gets listed at a premium of about 15%, EV to EBITDA for FY26 will stand at 23 times, and if it gets listed at a premium of about 25%, which is what the market expectation is, FY26 EV to EBITDA will stand at about 25 times. So yes, it is expected to get listed on the bourses today, and the listing is expected to be strong.
So strong listing expected for this new kid on the block, Allied Blenders and Distillers listing today. But let's move on, and my colleague Ansh is now joining us with a snapshot of what the F&O and the derivative space is looking to shape up like today. Ansh, good morning. Take it away.
Good morning, Sneh. So let's start with what FIs did in the previous session. So we see that in index future, they have added some long of around 3,000 contract, due to which the total long position has touched 82.6%, which is at 3-year high. With this, the total long is at 8-year high, which shows their strong bullish stance in the market. Whereas if we talk about retail traders, then in index future, they have covered around 9,000 contract. On short side, they have added around 6,300 contract, and net to net, we are seeing addition of around 15,600 on downside, due to which the total long has dipped down to around 33.4%. So this shows that they continue to be bearish in the market. But this is a good news because some shorts are needed in the market, because short covering can give a good boost to the market. Now, if we talk about Nifty, then in the previous session, we missed a record high by 10 points, but then we were able to achieve that highest closing level. But with this on charts, RSI has touched 70 level, which indicates overbought region, and this is at 5-month high, which shows a bit of cautious signal as per technical analysis. But if we see futures and options, then in futures we are seeing open interest going up by around 3%, indicating long build-up, which is a positive sign. Whereas on option front as well, we are seeing some put writing happening at 24,100. So traders are expecting some support around this level. If we talk about Nifty Bank, then as you can see in the chart as well, Nifty Bank has been consolidating from last 4 to 5 sessions, but then it has a very good support at around 51,900, which keeps the bias still positive here. Whereas in index future, we are seeing open interest going up by around 2%, indicating long build-up, which is again a positive sign. Whereas on option front, we are seeing put writing happening at 52,200 and 52,500, indicating strong support around this level. Lastly, let's have a quick view on few F&O stocks that are in focus. And we are seeing significant long build-up happening in Mahanagar Gas, Deepak Nitrate and ACC, where short build-up for NTPC, IDFC and Indian Hotels. So keep an eye on the stocks.
Thank you so much for that, keeping an eye out on the stocks on the back of the F&O story. But let's move on and talk about stocks that are going to be in focus on the back of news flows. Jinnah is joining in with us this morning. Jinnah, good morning. Which stocks are you keeping on the radar?
Well, yes, so first up, Tata Motors will be in focus. The company has registered sale of 2.29 lakh units in Q1 of FY 2025. The total CV sales saw an uptick of about 6% year-on-year basis, whereas the PV sales declined by 1% year-on-year basis. Next will be Gandhar Oil Refinery. Texo Lubritech, which is a material subsidiary of the company, has entered a contract with Abu Dhabi National Oil for distribution of PJSC, and the estimated annual value of this contract will be rupees 375 crores for each year from FY 2024 to FY 2026. Next up, DCX Systems will be in focus. This company has received order of about 1,250 crores from L&T. They will be manufacturing and supplying electronics modules. Next will be Raymond, as the company has fixed its record date for the hive off as 11th of July. Each shareholders of Raymond will be getting an allotted 4 equity shares of Raymond Lifestyle for each 5 equity shareholders for Raymond. Also lastly, KPI Green Energy will be in focus as companies got approval for 15 megawatt solar power project under its CPP segment and also got received a CEIG approval for 13.6 megawatt solar power under its IPP segment.
Alright, Janay, thanks so much for taking us through that list of all the stocks that are expected to be buzzing on the back of their individual news flow today. We'll surely be keeping a close eye on all of these stocks. But we also have yet another group of stocks that are expected to be a buzz on the back of brokerage notes. And Gaurav is joining us with a roundup of just that. Good morning, Gaurav.
Well, yes. First, let's begin with Anantraj because on this company, DAM Capital has now initiated with buy rating and a target price of 620 rupees. What they believe is that the order pipeline is very strong for the company. If you look at the revenue and EBITDA, now they're expecting revenue to increase almost with a CAGR of 35%, while EBITDA may increase with a CAGR of 65% over the next 2 years. And the reason being that they believe that time and cost advantage for the company in data center space is actually at an advantage advantage for the company. And lastly, they also believe that the data center potential has not been factored in for the company yet by the street, and that is why they are being bullish on Anantraj. Next, let's talk about Epigral because MK has now initiated with buy rating and target price of 2000 rupees on this company. What they believe is that caustic soda cycle is bottoming out. If you look at chlorine derivatives, they are also contributing to increase in the revenue, and if you look at ECH and CPCV, they are also low hanging fruits according to them. And on back of this, we may see some CAGR of 25% in earnings over the next few years for the company, and that is why they are being bullish on this counter as well. Lastly, let's also watch out for Indigo because Goldman Sachs has now maintained their buy rating and a target price of 4,700 rupees because what they believe is that near-term catalysts are limited for the company, but if you look at long-term story, it still remains intact for Indigo. They are expecting international travel to increase with a CAGR of 13% by FY30, and lastly, they also believe that market share of the company will actually continue to gain the market share, and we may see some lag. If we may see some lag in fresh deliveries, then that may put some cost on the pressure front, but definitely they are being bullish on Indigo, and with the target price of 4,700, it still leaves a further upside. So definitely watching out on these counters and see how they perform in coming days.
Okay, thank you so much, Gaurav, for joining in with us for the brokerages, and we're keeping an eye out on that. Now, Mihir Vora, CIO of Trust Mutual Fund, shares a list of stocks and sectors he is bullish on. Listen in.
Certainly. So on a relative basis, financials are, I think, the most attractive, though they have disappointed surprisingly, in spite of having the best ever asset quality, decent growth. But the concerns about liquidity being tighter for longer are probably weighing on the sector. Plus the RBI's, not directive, I would say, but indications that they might expect some tempering on the personal loans, the unsecured loan part. That's probably weighing a bit on the sector. But as far as the current fundamentals are concerned, I don't think we've ever seen valuations and fundamentals so attractive.
Ashok, I see a good representation in one of the sectors is telecom. Now, telecom after 5 years is seeing the first hike, and the general expectation is that there may be another one 6 to 8 months down the line. And one of the sectors where fundamentals are improving pretty sharply. But they have rallied as well in the last 6 months. How do you kind of balance it out? Do you see more scope for expansion if tariff hikes flow down to numbers and one more comes along?
See, telecom I see as a steady growth sector now. I no longer see it as a very low growth sector or a very high growth sector. If you look at the macro, long-term macro, when the telecom sector was growing at fast rates because the penetration was low, the spending on telecom as a percentage of GDP went up to almost as high as 2% of GDP. This was in.
Alright, let's shift away from the world of markets. Take a look at what's been happening outside in the world of politics then. And Prime Minister Narendra Modi is all set to respond to the motion of thanks debate in the Lok Sabha today. Modi's reply will come a day after the leader of opposition Rahul Gandhi has launched an attack on the Bharatiya Janata Party over Hindu extremism, neat paper leak allegations and the Agnipath scheme. Moving on, the BJP amps up its attack on TMC over shocking a video showing assault of 2 people in full public view. The Bengal Governor C.V. Ananda Bose has accused cops of being on Chief Minister Mamata Banerjee's payroll, and Governor Bose and the NHRC team is likely to visit the incident site today. Shifting focus to some global news, it's a big win coming in for former US President Donald Trump. The US Supreme Court has ruled former president has some immunity from criminal prosecution. The 6-3 decision split along ideological lines comes 4 months ahead of the election in which Trump is the Republican candidate to take on Democrat Joe Biden.
The Delhi High Court today will hear AAP chief Arvind Kejriwal's plea against the arrest by CBI. A bench led by Justice Neena Bansal Krishna will hear the Delhi Chief Minister's petition, and the AAP national convener has also challenged a June 26th order of the trial court by which he was remanded in the CBI's custody for 3 days. Some update coming in the world of football, and Euro 2024 Cristiano Ronaldo's Portugal stormed into the quarterfinals after defeating the spirited Slovenia 3-0 in penalties. France too managed to scrape through into the quarterfinals courtesy by an own goal by the rivals Belgium. Both Portugal as well as France will now face each other for a spot in the semi-finals.
Alright, with that, we end the show of Market Cafe on this note. That's a wrap on everything that happened yesterday post-market hours and what we can look forward to today. It's a goodbye from Vinny, me and the entire team that put this show together. But while we bid you goodbye, you stay tuned to the channel because the market will take all of that action ahead.
If you like this video, then like, share and subscribe to ET Now.